All right, and we're back, and we're using TradingView. Wow, I am really happy. Yeah, TradingView is so much better than Thinkorswim charts. Thinkorswim charts are fucking not even. It's not even close. It's so bad. They are so bad. It's a shame because they were the shit for the longest time. I tried. I really, really tried. They are garbage. They are absolutely garbage. Garbage. They are garbage. So we are under some pressure. I mean, it's not completely horrible yet. We did have a pretty rough day yesterday. It was a pretty decent sell-off. The NASDAQ was down 400 or 500. More pressure again today. Bitcoin, below 100K. I don't really give a shit. I don't really have much. I think I have like maybe, I don't even think I have $1,000 of my account in any crypto. Just not a believer, folks. Sorry. Don't hate. It's just, I haven't bought in. I have really no interest. Again, I feel like I have enough. And, and all the people out there beating the table, all the gorillas out there, it's the same like 10 or 15 people. Every time there's like, and then they're like, yeah, and then they like, do these duets with somebody else, and they're like, pointing to their ears like, oh, listen to this guy. Like, come on, dude, shut up. Shut up. The train has left the station. It's gone. It's just another asset. Stop. Stop with you're going to get rich. No, you're not. You're not going to get rich. Can you make money? Yeah, you can make some money. You definitely can make some money. There's no doubt. But it's just another asset. So shut up. Unless you own it like down 5,000, and I'm going to put that number. I've been putting the number out there. Unless you own these or any of these, literally 100 times less than where they are now, you are in the asset stage now. It is now beyond like, oh, this is a new thing, right? You're getting in on the ground floor. That's gone. Those days are gone. So understand that. And it's just another asset. You have the potential to make just as much money in Bitcoin as you do in any other asset right now, whether it's stocks, whether it's bonds, whether it's real estate, whether it's going into business and doing something or doing something with AI. You have the same potential. And so that's it. And that's really all I have to say. I mean, I'm not buying any on this. I honestly think you can see Bitcoin going down to like 50K, and I don't want to like be one of these people that's just like beating on it, but I can honestly see it going back down there, because when you start zooming out, we have had this massive run this year, literally doubling, right? I mean, it went from 50. Now, there's a lot of stuff that's doubled, but I can really see this thing coming back down to, 50, 60K down here and kind of chopping through all this, and if it does, in fact, get back down here, then maybe I'm going to start being a little interested. Otherwise, I'm not touching it. I have no interest in it. I'm not touching it. I don't really. Anyway, that's all I really want to say about it. Yeah, and I could be wrong. And one thing, I actually tried to point this out to somebody a couple of days ago. They were saying about Bitcoin, it doubled in price. I was like, yeah, you know what? There was, I can name off quite a few stocks that have not only doubled in price but tripled and quadrupled. And so Okay. There's a lot. The market was on a tear this year. And Bitcoin was part of that action. And so what? And so, and then, and the reason why I keep trying to like put people down to earth is that, look, you got something that's like $100,000 now. It's $100,000 at this point. If the amount of money it is going to take to double that, like just say it, double it. It's enormous. The math doesn't math, folks. That's what I'm trying to say. The math isn't mathing for it to have the potential to double. Does it have the potential to go up? Yeah, absolutely it does. But you know what? The math isn't mathing. There's just not enough. They can't print enough money to have it go up that fast. So anyway, that is kind of the story, and that's all I really want to say about it. It's under pressure, just like everything else right now. This was supposed to be the counter to everything else, right? And it turned out that, look, it's just like anything else now, and it's a risk-on asset. That's it. Nothing more, nothing less. So we're under pressure, and yesterday's short worked out pretty well. I had shorted, and I wish I could tell you that I got out at 67.50. I did not. I got out at 67.70. I had to walk away, and I never like to have trades on, especially in futures, if I'm not sitting in front of my computer or have access to be able to get on, because I just know how futures work. I've been doing this a long time, and that I can't do it. I've been doing this long, and I just can't do it. I can't let a futures trade like go without, like, I had to stop in and everything else. But the problem is that futures change so fast, or a news thing, and then I knew Trump was going to come out and start saying stuff. And I did not want to be in something and have this thing just kind of start ripping the other way and give all my profits back. So not that it was a huge trade. It was, I think I made $180 or something. It wasn't. But that was my story. But we did hit 67.50, which was right there. And then the next spot is going to be down here. And this is why I love these charts, folks. Is that we got the pivots on here. Look at that. I love pivots, man. I love pivots. So to the upside, we're going to be looking at 67.80 as a possible short today. If indeed, I'm not going to short this market right now on a gap down in the morning. Just not. But I do like 67.12.50. All right, so I am going to mark that 67.12.50, which is an S1. And, look, I'm going to tell you this. I'm going to little inside baseball type thing. This is all the same shit that your false prophet ICT, he doesn't put these up here. But that's basically what he's using, folks. I guarantee if I put an ICT chart on top of some of these pivots, you're going to be pleasantly surprised at a lot of these, when they say, oh, there's a fair value gap or whatever like terminology they created to make it seem like it's something. Anyway, these are what, these are what they're using. And they've been using these forever. Forever they've been using these. These are not new. Now, are these etched in stone? No, absolutely not, right? I mean, there's a whole mechanism of price action that's associated with these. Like I always say, is when you're coming down to support, and this is true for, to the upside as well, if you're talking about resistance as well and shorting resistance, but it's, the old adage, right? You buy support, you sell resistance. But there is a level of price action that you have to be aware of too. And as I always say, if you drift down to these support levels, it makes them that much more stronger of an area. Where if we drive down to these levels with any kind of momentum or real authority, it could put it off the table. And the reason is that you're not going to stand in front. The theory is, for me anyway, and what history has proven to me, is that you're not going to stand in front of a freight train. I mean, if they're going to sell this off, they're not going to give a shit whether or not there's a pivot down there. And you may get what I call is like that false bounce, where it'll come down there and you'll have all these people playing the pivots. It'll bounce a few ticks or maybe even, a handful of ticks, and then they just drive it right back down again. So that there is a level of price action that you have to be aware of with these. And I stress that because I've had some people who say, like, did you see how it got there? And I've repeatedly said that, look, if we start selling off and they like rip the carpet out, I'm not standing in front of this because nobody's going to give a shit whether this is here or not. But if we drift down, I mean, you could see overnight, we got pretty close. Right? I don't even know how. Let's take a look at that candle. We got pretty close. The low on that candle was 67.15, so literally 2 points before that reversal, and that was just an hour ago on the last candle. So, this is an hourly chart. This is what I usually like to use when I'm looking at, levels. I usually like to look at, if I'm, longer term, I usually look at the 4 hour, but it's 4 hour, 1 hour, and then from 1 hour, look, if you're a minute person, go to the 5 minute, or if you're a tick person, I'm a tick person, I will go to the 512 or sometimes the 987. If it's a really fast tape, I'll do 987 tick. And why is that? Because if it's a fast tape and I'm getting a lot of action, the 987 will be a little cleaner than the 512. The 512 could be really busy and give me a lot of false things. So, again, it's all part of, feeling out. So anyway, there you go. And then also a 6670. What the heck was that? Oh, God. Stop with this. Why is this doing this? Ish. 6670. I wanted to start an alert. See, I haven't used these. See? Alert. There it is, right? So a 6671.50. So that's what I'm looking at on the downside. And then if we actually go and let's just zoom in a little bit and get a little bit better picture so we can get some profile here. You'll notice that there is, you start to see where these high volume nodes of profile kind of start to come out. Like, look right here. I'm not making this up. I'm not making it up, folks. I don't make it up. I just do what the charts say, and there's one true thing, two true things in the market: volume and price. Everything else, indicators, all this other bullshit, everything else that they've actually come up with since then is all based on two things: volume and price. And that's really all I look at. If you notice, my charts are completely clean. I don't have MAs, I don't have SMAs, I don't have EMAs, I don't have MACD, I don't have Fisher transform or the TTM squeeze or whatever it is that you use. Hey, fine. If you use that stuff, I don't care. Whatever works for you, that's good. But for me, it's all about cleanliness, man. Keep it clean and keep it simple. And then you notice here, red is sellers and green is buyers, right? And that's how they have this set up. Now, you can see there was a lot of sellers down here where they outweighed the buyers, but right below that, there were some buyers. So anyway, that is where we're going on the ES. Now, as far as like to the upside, if we get a rally, we likely, I don't really see, if we get a rally, I don't really see us getting up over this pivot 67.80 today. I think there's going to be a lot of pressure to the downside. If in fact we do, likely candidate, we get back up to R1, 68. 22. But if I was actually going to short this market now on a leg higher, I really like this area. I don't know. That's a big move. I don't know if we get there today or not. But this 68.49.25, or what is it? 68.48.50. 68.48.50 looks like a primo spot to short. Just from a chart point of view, and the fact that it's a pivot, you got a low volume node, right? Not a lot of activity up there, so there's really not a lot of interest on either side, and those tend to have a propensity for a little bit of negative price action, right? There's not a lot of gravity, so to speak, up there, and a lot of interest. So, based on the chart here today. And so that's it. That's where I'm going with the ES today. I got my spots marked. I'm not going to just short. I'm going to lie, and I may, depending on what I see in the next 15 minutes or so, I may actually try and grab a long. Now, go into the upside, just one contract, but down here at 12, I'm going to probably go with a couple of them, probably two minis at that point down there, because I really like that level. I don't know let's take a look. I haven't really looked at what is on the calendar, only because, but there's a boatload of stuff. Wages, manufacturing, non-farm payrolls. So there's a bunch of that stuff, and I think that's all, right? Is this the first Friday? Yes, so this is the first Friday, so it's all employment numbers, unemployment rate. Like, who cares? Like, I don't know. Like, does anybody even care about what the unemployment rate is anymore? I mean, I don't know if we do. Well, we could just be in a point where the market's just looking for looking to sell something. So anyway, that's it on the ES. So there you have it. All right. And then let's move over to Big Tech. Big Tech had a big problem yesterday. Couldn't get out of its own way. The only thing, I think the only tech stock or big tech stock, at least on my list, that even had a decent day or didn't get crushed was Apple, surprisingly. So Apple continues to be a gem. And we'll put up Apple and we'll put up our least. And these are the big tech stocks. These are all the stocks that I follow on an ongoing basis. Apple was pretty much the only one that didn't have, outside of, I don't even know why I have Newsmax on there. I think I put it on there just to kind of keep an eye on it but that's been a piece of garbage. Intel, Micron, and Apple. And everything else pretty much got, even IBM. I didn't even realize that. IBM. And then Datadog. And I didn't even do an earnings trade on that. And I'm glad, because I would have gotten blown out. That one actually took off. So, just looking at some stuff, Apple continues to look strong. Now, the problem with Apple, and it's not so much the problem I have with Apple, is that I don't like to buy stuff when it's up here like this. It's tough. It's tough for me to do it. Now, I already own a ton of Apple anyway, but, hey, I never have a problem with getting more if it's what is running. I just don't know if it's got much. I don't know if it's got much more gas in the tank and how much longer it can buck the trend of everything else. It's eventually going to give it back. But who am I to say when that's going to happen? I think if we were to look at Apple, and I'm having a bad day today. Here, look, full disclosure, I'm having a really bad day. I'm down like $2,500 already out of the gate. So it ain't going to be a fun day. But if you look at Apple, and volatility is not, and if I knew how to, volatility is non-existent in this stock at all. I think it pays, and they don't have that on here. I think it pays a decent dividend these days. Now you can see here's all my stuff in Apple that I've done over the course. It does do that. I think it pays a pretty good dividend. 26 cents. So it's not even 1%. So it's 26 cents. That sucks. That's a crappy dividend. And not that should even be a catalyst. So, I mean, I guess more importantly is like, what do you do in here? Like, what do you do? How do you really trade this? It's actually at all-time highs. You can't sell puts. I mean, you can if you want, but you really can't sell puts. You're not getting anything for it. And to me, the only really real way you're going to play this one is through some kind of calendar spread or maybe even like a diagonal or something like that, or just like go out in time. You know, one thing I always say, look, if you're that hell-bent on owning Apple, and it's probably not a bad, go out a year. Go out to the December. These are the December 26 and go buy the leaps. Do the December 26s or the January. I think there's a January 27, right? Do any one of these, right? Do the January or the Decembers. Either one of those. And the reason why I say that is, look, go out. You got a year plus, right? You're out over a year. You're buying the leaps. You're going to spend some money on them. But so what? Because you're giving yourself some time to make money. And then go in the money. You don't have to go deep in the money, but go a little in the money. And, you know, my first step is to go down in here, and we're trading at 260, so go right around 260, 270. And that's about 60 right here. That's about a 60 delta. You know, look, this isn't a banger. You know, you're not going to break the bank on this. You're going to pay a little money, but it's a hell of a lot cheaper, 560 as opposed to $4,000. Now, if you want to just go buy the option outright, yeah, go ahead. I never really like to do that because I always feel like the spread kind of, you know, although it limits your upside, it kind of puts it in a price range that makes it palatable. And I would go there with something like that. That would be my call. You know, this way you're kind of in a little bit of the money on this. You know, you are paying a little bit of a premium for time, but you do have an enormous amount of time, right? No theta burn on this at all, so you don't have to worry about it. And you're kind of have a little bit of a cushion. So if it does decide to kind of tank a little bit, go down 10, 15 bucks before it possibly makes the next leg higher, you know, then yeah, you know, so I mean, and that's kind of my take on Apple, and that's how you trade it, or do like a calendar spread or something. I don't know if a calendar spread's really going to be the answer. If you did do a calendar spread, I would probably still go and buy the December 26. And then I would actually back that off a few months, all right? And you have September here, and then do the December 260s. It's a little cheaper, And what this does is this kind of gives you a little bit of flexibility to possibly roll this out if it starts going the other way on you, right? You could start rolling this down. I mean, you could do it with the other one too. You could start rolling that down or rolling it out. So, I mean, it does give you some flexibility there. Again, the buying power is not as much. But that's kind of how I would play Apple here if you feel that hell-bent on trading it. Now, the one thing I'm going to say is, like, as much as my spider trading sense tells me to possibly short some of these stocks, I don't really think you're getting paid to short these stocks. And that's why I haven't really, although volatility is actually elevated at 20, a lot of these stocks that have actually gotten beat up don't really have very good volatility in them. I mean, here's Meta. That thing's gotten absolutely slaughtered. It's down almost over $100. And let's just put Meta up. Meta. It's down over $100. I mean, it has just gotten rocked and seems to continue to fall. Let's do the 4 hour on this. Just put that in perspective. And it looks to me like this thing's got the potential, but I'm just not getting paid to be short. And the reason why, if I'm gonna short, I want to short calls. I don't want to buy puts. Buying puts sucks. I don't want to like diss on people. I know people have bought puts and done well. My experience with puts is it's literally like 50-50 shot. And a lot of times you just don't get the bang for your buck in the puts because, again, the reason I think you get a better return on shorting the calls is because everything has call skew. And with everything having call skew, your potential to make money on short calls is so much greater than just buying puts. And that's kind of just been my experience. And so I've been avoiding buying puts overall on any of these stocks. And again, Meta is another one that, if you notice here, I'm actually out in December. I went out to December. I did the same thing there that I'm telling you to do in Apple, is just go out in time. Go out in time, go in the money, and just try and play it that way if you feel hell-bent on getting long some of these stocks. I mean, to me, I just think, this is a pretty good opportunity to get in on some of these stocks that have kind of run away from a lot of folks. And I know they're kind of taking a little bit of a beating, but that's the benefit. Microsoft's another one. That's the benefit of going out in time and kind of staying a bit in the money, is that you're going to have a little bit of intrinsic value to be able to ride through some of this. And as I said, I likely believe that this is going to be a pretty rocky 2 months. I think November and, to a lesser extent, December is going to be a pretty rocky time. I think you're going to see, exactly what we're seeing this last week. We're going to get rocked. We're going to have days where we're back up 50 or 60. Maybe we have a couple of days. Maybe they string a couple of days together where we actually have some nice bounces. And I think net, we wind up right around, I'll throw that number out there. I think we wind up right around 6,750 to 6,800 by the end of the year, and we've gone nowhere. And the other thing that's going on too, and I rarely listen to anybody on CNBC, but there is a bit of a rotation going on in some of the stocks. So if I were to bring up a different list, if you were to look at some of the healthcare stocks and even some of the biotech stocks, they've done really, really well this quarter. And I think there's a little bit of, And I'm not big on that. To me, that used to be a thing like 20 years ago, 20 or 25 years ago. Today, not so much. Money sloshes around and moves around so fast now. And with everything being electronic, a lot of that shit's kind of bullshit. But, in this case, though, I think there's a little proof that is what's going on. You have, these huge amount of profits in all these stocks, whether it's Oracle, NVIDIA, Netflix, and Netflix is going to be splitting. I'm going to talk about that one. I think Netflix is actually a good one to get into here before it splits. Palantir, another one. They've been just rocking this thing, but look at the trajectory on this, though. It's just been up, and we go. And even to a lesser extent, Tesla's had a good run from these lows that I've marked way back, in April. It's been all the way up, but this one's kind of forming a double top, and you start looking at these, but then if we were to change the list, like I said I was going to do, but I kept yapping like a friggin' jag. I'll bring up some ETFs. If you look at the XLV, which is the healthcare, and we just zoom in to that, after making these lows down here, it's been a great trajectory up on these, and they continue to be strong. Now, is there much more gas left in the tank? I don't know. I think we look about halfway. It's about halfway from where it was. We're another 10 points away. So there is some potential there on those. And the reason I'm looking at the reason why I'm looking at the ETF is because it just gives a better indication of the industry as opposed to just a few individual stocks. But then if you go and look at some of the individual stocks, the Pfizer's and the Merck has just gotten absolutely murdered this year, but it is kind of bouncing back. You got like the Eli Lilly's and all those. Those are all in here. This has actually had a pretty good last couple of quarters. The other one to look at is the XBI. This thing has just been a rocket ship since April. And I was down on this one only because my feeling at the time was, I say, look, if they're going to come after the drug companies, all right, we just got our alert. If they're going to come after the drug companies and everything else, it just hit there and it bounced. And so I completely missed it. That sucks. That sucks. It bounced. It just went down there and bounced. What the frick? Oh, you know why? I know why. Because I'm not logged in. My data is lagged. That's exactly what it is. Yeah, we went down there and tagged it. So, there it goes. Look at that. See the bounce, folks? See, look at that. It even happened. Unfortunately, I didn't do anything, right? But you would have gotten how many ticks? You would have gotten. You could have been able to lock in a nice little trade. Now that wasn't going to be something I was going to look to bequeath to my kids, but there it is. There's the bounce, 67.12. You couldn't have marked it up any better. And there it is. And unfortunately, I'm a nut. I'm a nut case because I didn't even freaking get in it. But hey, hopefully someone did. But there you go. Anyway, and it might back down, because these types of trades off these pivots, this is one of those things where I would actually go in at 67.12, right? Put my stop literally 8 or 10 ticks below, and I'm looking for maybe 10 ticks. Tops, 10 or 12 ticks, and I'm looking to get out. And you would have definitely gotten that here. You would have just banged that right out. So anywho, with that being the case, right, with the XBI, I was down on this from April. Actually, I got in later. I got in more up here in the 70s. But this has been an absolute rocket ship all year. And my feeling was at the time was that if they're going to come after the drug companies and all these other, more companies are going to put money into R&D in biotech to try and come up with bigger and better and cheaper pharmaceuticals. And that turned out to be the case. I mean, this thing is just literally, and it's actually, I think it might be no. Okay. So, I mean, and then if you look at it long term, it's not even close. Not even close to being halfway to where its all-time highs were. So, you do still even have potential in there. So now let's look at those two. Now, those are not really the best two trading vehicles, unfortunately. So if we were to look at the XLV, I own this as I just bought the stock. But trading these, again, IV kind of sucks. This is one of those where, hey, look, go out, do the leaps. In this case, you could even do like a March, go in the money. And the nice thing about this is there's decent open interest up and down in this product, the XLV. And you can do tiny little trades. This is a perfect trading vehicle for a small account. Where you can do these small little trades. You can do these like $1 wides. And, look, you're risking 35 to make 65. And if you want to go a little wider and you want to use a little bit more, right? It's perfect. You want to do 2 wide, you want to go 3 wide, you want to go 5 wide. You have the choices in here. So let your heart, let your imagination run wild. I would recommend going at or near the money, if not right at the money. Stay with the 50 deltas in general. And I would say go out March or later. So there's the XLV. I still think there's opportunity there. You can't sell anything in here. There's not enough volatility. And then the XBI, same sort of thing. I would definitely go out to the March. And you have an enormous amount of options here to choose from. I kind of like my mind to be set on doing something like this. You have, the 110, 111. You want to do the 109, 110, 110. It's right at 108. You could do the 108, 109. You could see there's like a lot you can do in here to really take advantage of. And I do think there's some potential here left in these because they've been suppressed so long, and they're pretty much let's face it, they've been out of flavor. The last 5 years, 4 or 5 years, the whole market's been consumed with everything tech. I mean, you name it, it's been tech. Tech this, tech that, AI, and kind of all these, I would call like normal companies that we've been familiar with, kind of got pushed to the wayside and forgotten about. And they seem to be a little bit back in flavor. And if you're looking for something outside of all the tech and all the other stuff, this is where to go. And the reason I like the ETFs in these is that I would prefer to be in the basket of stocks in the industry as opposed to just trying to pick who in the industry is going to be the leader. And as you see here, that these do tend to move all together. The healthcare and the biotechs. All right. And so that's kind of where I would sit. Now, so if you're really looking for some place to go, that's where I would go. And I don't have a problem doing any of those trades. And so you might even see me actually take on a few of those today. The XBI or the XLV. And so let's talk about earnings. I did the XYZ. I did this Iron Condor block. Square. It's square. I'm in trouble. I'm in trouble. I'm in trouble with this. I did the 65, 60, 95. So I'm going to be fine on the call side, but on the put side, I'm going to be under some pressure. It's down $10 from earnings. I didn't even really look at it. I'm going to look at it right now. I didn't see what they were. This stock has been an absolute piece. I've said it even when I did it, and I did it by mistake. I didn't even really want to do it. This stock has been a piece of junk for so long. And then you have all the usual talking heads now come out after earnings. Oh, we're going to adjust the price target. I mean, come on. I mean, why don't you do it? Like, I mean, this shit just makes me laugh. It's like, oh yeah, come on, wait, we're going to turn our price target. Oh, here's Dewey, Cheatham and Howe. I mean, I don't even know who the hell who's TD Cohen. I never even heard of them. I have no idea. I've heard of Piper Sandler, but, Dewey, Cheatham, and Howe. Yeah, we're going to take a price target. Yeah, what the fuck are you doing? This shit, it's like, don't even say anything. You know what I mean? Like, to me, that's embarrassing, but they don't care. They don't care. I didn't really look at them. I'm just going to look at them real quick on what, like, Raymond James, Goldman Sachs, Wolf Research. Yeah, Goldman Sachs was short. They were short. Yeah, they moved their price target to 82. Yeah, right. Drops after third quarter, miss. Okay. More than 8%. Shares trading lower. Blah, blah, blah. EPS 54, missed. I mean, that's a huge miss. So that's really and I don't know. To me, this is just a company on the decline, man. Just look back. Let's look at that real quick. Let's look at that. I don't even have that on any list on here. But I'll just pump it in. X, Y, Z. It has been this is an absolute company in decline. I mean, look at this. This is the daily. This is really what you call a company in absolute decline. I mean, having its heyday back in the pandemic, $280. The thing is at $70. It's now going down to $60. You have lows here at 40. That's pretty much where it was before all the pandemic and crap, right? I mean, if you look down here, this is basically where it was. It couldn't get over 100, and then this thing just skyrocketed, and then it's just been after that. This is a company in decline, man. I mean, you take this out, and this thing has gone nowhere. This looks like Verizon. Sad, very sad, very, very sad. Right? You take that out, and this has just gone nowhere. I think I was right on this side. I think I was too tight up here on the put side. I should have been more down in here in the $55 range when I was going to sell puts. But hey, what are you going to do? Such is life. I thought they were going to be okay. I didn't think they were going to completely hit a foul ball. I thought the earnings I expected the earnings to come in at least. I expected the earnings to come in at least, decent, and I figured it was going to do nothing. But this is definitely a company in decline. It's Block, it's Square. And I don't actually even see them when I go to small businesses anymore. I don't even see people really using their service. I think a lot of people have moved off of it. Obviously, right? Because look, it's a piece of crap. So I'm in trouble in that one. What I'm likely going to do is I'm short the 65.60. I'm likely going to roll it. I will probably roll this out to January, likely. Yeah, I won't roll it to December. I like to give myself a little bit more time. But I will likely roll that out to December, and with the hopes is that it just kind of stabilizes here and even gets a small bounce back. I'd even be looking for it because the biggest problem with this would be if I get assigned. That would suck because that would mean that I would own 100 shares at 65, and then I'd have to start selling calls against it. It is what it is, though, right? As I always say, it is what it is. You deal with what you have. And so there's the story, and that's pretty much it. And that was all I did from yesterday. Oh, no, that's a lie. What I also did yesterday is, and it's not going to be too good today, is I bought a couple of weeklies. I bought the November 610 weeklies that expire in 3 days on the Qs, and I also bought the IWM. I did the same thing. I bought the 240s that expire in 3 days. And again, I was looking for a little bit of I wasn't looking for a banger on these. I was really just looking for a bounce. I was looking for us to just kind of bounce up, come in the morning and have this be up a couple, maybe $100. I don't even know. I would even take, at this point, I take 30 or $40. But that's what I had also done yesterday in my trading. And there you have it. And then also AMD, I bought some way out. Like you can see here, I did it in a bunch of accounts. I have a bunch of different accounts. I bought these 290, 300 call spreads out in December next year. All right. And as far as what I'm going to do today, it's pretty much damage control. I already fucked up and didn't get this trade. We're now rallying 67.25. I'm kicking myself in the freaking ass. That sucks. That's one thing. TradingView. Just so you know, I don't have a data feed set up with this. I didn't log in. I can log into Tasty Trade with this, and if you don't log in, you don't get real time. You're delayed by like a minute or two, and that's exactly what happened here. I was delayed by a minute or two, and then you could see how fast that happens. And I just totally botched that up. So, but hopefully, if anybody's listening, I don't think anybody's. But look at that! Look at that bounce off of there, folks. Look at that. I mean, you can't actually. And then if I were to go to a 5 minute, look at that. Look at that. Look at that. Right? So take your ICT and shove it up your ass. That's all I have to say. Because look, ICT is a false prophet, and I'll say it again. And there's, just do yourself a favor. If you really want to convince, there's a dude out there who did a whole thing. He did like 3 or 4, maybe 5 videos on ICT. And just type in YouTube ICT scam. And the guy's stuff will come up. And he makes so many great points. And he's caught the guy. He's caught him a number of times. And he's caught a bunch of people. Falsifying their returns, showing that they're trading sim accounts, and it blows my mind, and then it's just people it's like people when they vote, right? They just get that mindset, and it's the same thing with this stuff. Is like he has his followers, and they're just gonna follow him all the way down into the fiery depths of hell, no matter what happens. So anyway, beautiful trade if you got it. I'm I suck. And so that's why I'm stuck here working for a living, because I suck and I didn't get this. But anyway, there you have it. So we're getting a little bit of a bounce, which is good for my other stuff, because I'd like to see us have a green day today. I don't want to see, I actually don't want to see like a huge big day, but I'd like to see the ES at least print green today at the end of the day, even if it's 20 points. Same thing with the NASDAQ, 100 points would be perfect. But other than that, it's a pretty slow day, and then we're going to wait for these numbers to come out, and I'm sure all kinds of hell is going to break loose for about 10 minutes, and then it'll all go away. All right, so there you have it. Have a good day. Have a good weekend, and trade them tight.